So, you've probably heard about cryptocurrency. Things like Bitcoin, Ethereum. These are digital currencies that use cryptography to keep them secure. Think of it like a secret digital code preventing counterfeiting or double spending. Most run on blockchain, a public ledger everyone can see but no one can change. It's decentralized, no single bank or government in charge. Revolutionary, but often complicated and expensive to join. This is where Pi Network enters the scene. Pi asks, what if we made crypto easier? Pi aims to make digital money accessible to everyday people. You mine or earn Pi directly from your smartphone. Unlike Bitcoin's power-hungry mining, Pi's is simple. Download the app, create an account, and tap once every 24 hours to prove you're human. Founded by Stanford grads to fix first-gen crypto problems like early concentration, Bitcoin wealth clustered among early adopters and large miners. It became more of an asset for the wealthy than a people's currency. Pi's mission is to put power back to the masses, build a huge, inclusive user network before tradable value is set. As of today, October 1st, 2025, Pi is in enclosed mainnet. The network is live, but walled off from the outside world. You can earn Pi, transfer to verified users, and use it in a limited set of apps. But you cannot trade for dollars, euros, or other crypto. That's the core debate. Now that we know Pi's approach, let's talk about GCV. It stands for Global Consensus Value. It's not an official core team term, but a concept grown from the Pi community, a grassroots effort to agree on a value for one Pi. Think of it as a massive collective price tag. Millions try to set value before open markets exist. Supporters champion $314,159 per Pi as the GCV. They believe agreement can set de facto value. Money works because people agree on its worth. The number nods to the constant Pi 3.14159. For supporters, it's a rallying cry and symbol of collective effort. The GCV community has set October 28, 2025 as a milestone. Not an official core team launch date, it's a community day of action. They want global transactions using the GCV price. That means valuing one Pi at 314,159. It's a proof of concept to generate data and media attention. Show real-world goods and services traded, cars, electronics, artisan crafts, professional services, a coordinated push to make the value tangible. The message targets the core team, outside investors, and the broader crypto space. A successful day could boost belief, attract merchants, and influence strategy. But it's high stakes. If activity is low, skeptics will call GCV a fantasy. That's why anticipation is huge. If you can't trade Pi yet, what is it worth today? Officially, no price. It's enclosed. Some exchanges show Pi, but they're IOUs, not real coins. People are trading promises of future Pi. IOU prices swing wildly, over $300 at times, down to around $30–50. Core team warns, these listings aren't authorized and carry high risk. No guarantee IOUs will be honored post-open mainnet. Meanwhile, inside Pi's barter economy, GCV drives pricing. Some post price goods at fractions of Pi aligned with GCV. Value is based solely on agreement between buyer and seller. Result, a massive split in perceived value, more philosophy than finance. On one side, the believers, the GCV evangelists. They see Pi as a genuine financial revolution. Tapping isn't a chore, it's investing in equitable access. The network's strength is its tens of millions of users. Value is social. If millions agree, who says they're wrong? Cross-border bartering showcases potential utility. They trust the slow rollout, KYC, ecosystem building, and stability. Rome wasn't built in a day. Good things come to those who wait. It's a narrative of hope, patience, and belief. Of course, for every believer, there's a doubter. Skeptics see hype and delay since 2019. No open trading, no clear path, so they question legitimacy. Users provide data and watch ads for a non-tradable coin. A six-figure GCV amplifies skepticism. With tens of billions of coins, the implied market cap looks impossible. peer-to-peer trades are hard to verify. Some may be misleading. They want proof. Open currency, utility, demand, volume. Their prediction? Modest pricing set by real-world use. To see how unusual Pi is, compare its launch to others. Bitcoin launched openly. Value grew from zero via adoption and market forces. Ethereum raised funds in an ICO. Utility via smart contracts fueled Ether demand. Pi chose user base first, value later, inside an enclosed system. Years focused on broad distribution and growth. The hope: immediate utility the day markets open. No major crypto tried this at scale. GCV challenges free market pricing with community consensus. Even with optimism, big roadblocks remain. Technical completion, mass KYC, and mature apps are still in progress. No firm timeline, some users still waiting on KYC. When trading opens, many may sell immediately. Pressure could tank price. Keeping $314,159 would require unprecedented buy-side capital. Sustainable value needs real utility beyond speculation. Achieving true consensus across millions is extremely hard. A single crack could make the structure crumble. Can October 28th and the GCV movement change everything? The answer is complex, a hopeful yes and a pragmatic no. A successful day could boost internal adoption and send a message. But social energy can't suspend economics. Turning community price into market price is colossal. Realistically, GCV may not hit six figures, but it might lift initial pricing and cushion drops. The community provides fuel. Long-term trajectory needs tech and real-world use. October 28th will test social consensus and show whether Pi is a footnote or the start of a new book.